Welcome to the Treasury Update podcast, presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in.
Welcome to the Treasury Update podcast. This is Jeffery, your host for this episode on real-time Treasury, and I am joined with Kate Pohl. Kate, welcome to the Treasury Update podcast.
Thank you so much for having me, Craig.
I've been on your podcast too, so this is very fun. So,
yes,
the topic of real-time Treasury, where we discuss the speed and changes to Treasury, this comes in the context of fast payments have occupied many conversations. But are we really heading to real-time Treasury? Is this the future? Is it partially hype? Is it mostly hype? And I'm joined with Kate Pohl, who's a longtime advisor in the Treasury and payment space. She's a well-known host of a Treasury podcast, and she is a frequent and regular host and moderator, facilitator in the banking and Treasury space for various events. And we met in Amsterdam.
We met in Amsterdam, right? So it was trade primarily. So it was working capital, the Working Capital Forum. That was fun.
So let's get into real-time Treasury. So if we think about real-time Treasury, or if you talk about real-time Treasury, is this about instantaneous? Is this about quick? How do you describe real-time, or what do you think the discussion is about real-time?
Yeah, for me, real-time, is it really real-time? I don't think so. For me, it's more on time or just in time. And, it depends on what the Treasury needs. So it's very much about information and the different components that actually support that, which includes, of course, instant payments. But there's more. What I'm talking about is, the kind of information that's coming in is about balances. It's not just about transactions and payments. So it's key to know your balances. It's key to know your FX positions. You want to know your exposures and loans. So the point for me is real time is having the information when you need it, how you need it, so that you're able to actually use it, manipulate it, put it into programs, do something with it, so that you can, as a treasurer, really plan, forecast, decide. So it's a real tool.
Certainly gets to some of the next question I was going to ask you. I think I'll still ask it. Was where's the value for the business user and the consumer? You started talking on the business side. Maybe we could jump to the consumer for a minute. What's the value for the consumer? I know if I have to transfer money to one of my children, it's way easier to use they bought something or they picked up something from the store and they're like, you owe $7 or whatever the amount is. And it's just an instant way of paying it using Zelle or Venmo. On the consumer side, it's faster really seems to matter quite a bit. What are your thoughts there on the consumer side? And then we'll move to the business side.
Yeah, sure. I mean, I think as with almost everything else in the payment space, I think it's the consumer side that picks these trends up first, and then it spills over into the corporate or the B2B or the wholesale side. I think that it also, part of it is people really wanting this experience. We have the one click, the immediate, the now, wanting your package from Amazon not in a week. I was used to waiting days. That was okay. Well, now we don't want to do that anymore. It has to be same day or next day, or else it isn't okay. And I think that's also sort of spilled over into payments. So, I want to see if I make a transfer, for example, from one account to another, I want to see that it's hit the account right away because I want to be able to use it. Or your example of your children, you want to make sure they have the money so they can take care of the transaction. Another piece that's important is really the B2C piece. So what about paying for items so that you can actually take them out of the store or, take something with you, reducing that risk that the payment will actually come. On the retail side, there perhaps faster is more important. So it is real time or close to real time, let's say, is more important as I see it than it is on the wholesale side.
Because of expectations or just because of the use cases or?
I think the expectations and the use cases, because a lot of the use cases that I think we're seeing are people that are really waiting for the money then so they can do something with it, or businesses waiting for consumers to pay so they can release the goods. Of course, it's tied up to risk, it's expectations, it's risk. But I think it's definitely the future.
So like if you get into any ride share, the payment tends to be instantaneous. When you're done, it charges it, and they've reduced a lot of the friction. And so if you're in a retail outlet, what's the friction? You pull out a card or you pull out your phone and you scan it. And so, yeah, so like on the retail side, does this speed up the process of the payment, or just it reduces the burden or the barrier?
Yeah, well, now we're getting into embedded payments that are then also real time. So I think it's convenience. It's reduced friction. It's convenience. It's ease. You don't have to worry about, what card to use, where it is. The details are in there. It's a slam dunk. Who isn't excited about using Uber, or here in Germany, Free Now? It's, these taxi, car services. It just makes it so much easier. You don't have to worry that you might not have the right change, or you might not have the right card, etc. And I think that, if you look at the other side, the drivers are very interested now in having more real-time payment of their salary. So, that's another side to it. Can they get paid right away? And what is right away? As soon as the ride is ended? Or is it the same day? Or is it that week? But no longer waiting the 2 weeks or the month that they used to. So, that's part of the equation too. People wanting to have their hard-earned cash up front.
Yeah, a few years back, the Pinnacle Awards, which is the awards put out by the Association of Financial Professionals, or the AFP, and the winner just a few years ago was Uber. And one of the things was using these immediate payments for paying, and the drivers could get payments 4 times a day, up to 4 times a day. It's like, hey, you start your day, I need cash. You download it, you buy gas or your coffee or whatever you're consuming. And then if you need something else, you pull it down. So, which seems 4 times a day seems like that's way more than anybody would ever need, but it was available. So it just removed the concerns.
But it worries me. I'll be quite honest, if I can just insert that. I mean, absolutely. On one hand, it's brilliant because you can have your money when you need it, whenever that is. But on the other hand, that means we're not budgeting. That means that, at the end of the month, or at the end of a quote unquote pay cycle, there may be nothing left. It's a little bit like my fear with buy now, pay later, that, the folks using that, and, it's heavily skewed towards, I think if you look at it globally, still towards the millennials or younger, who find this is a good way to purchase things. But I think they lose track of what they've actually purchased because they're only doing a payment plan, say 4 installments, maybe even more. Some plans are a little different. And now what we're seeing with the pinched economy, with higher rates and inflation, et cetera, is that people are actually using buy now, pay later for essentials. And that for me is very worrisome. It's great that it's possible, but what does that really mean? And what will that mean?
Yeah, interesting. Like, you mean for food?
I mean for food. Yeah, there's some statistics that just came out, and especially in the U.S., you're seeing that number go up significantly. Yes, food, clothing, essentials as opposed to nice to haves, like, oh, I want, she or he wants to have the newest thing. And now it's more like, how do I need shoes for my child who's starting school and the old ones no longer fit, or how do I get food on the table, or how do I pay this doctor bill? I mean, it's really spilling over into essentials, and I find it worrisome.
Yeah, I think there's a lot on the human element side there for sure. I did, when you said that, like essentials for food, I kept thinking of the joke part, and it's not funny, but the cartoon was funny. It was the Wimpy burger. I'll gladly pay you Tuesday for a hamburger today. And it's like Like, pretty interesting take on it, Kate. I can see the concern, right? It's the tech is there, but do you want to be running the gig economy? Is like, do you have to, like, I need money for lunch now, I need money for gas 2 hours later? Do you really need to be doing it? That's like hand to mouth. That's like taking that to the extreme, right?
But you see the uptake on the consumer side, I think, is a lot heavier no matter what country you look at. Whereas the uptake on the wholesale side is less. However, if we say, where is this all going? A very wise man who is interviewing me today once told me things are not going to get slower. So they are going to get faster, which leads us to, we are going to probably move from, payments that take a day or 2 days to settle to, if it's not instant within a few seconds, at least same day or same hour. So things are speeding up. The question is, do corporates really want that? And I spent a lot of time on this wholesale side talking to companies about this, and banks and payment providers. Because of the consumer side, this has been pushed very hard, but I'm not sure that the wholesale population is really all that interested for a whole variety of reasons. And some of them are, do they really need it? In other words, supplier payments versus Treasury. What about the cost? What about the fact that in many countries, there's a limit on the size of payment that can be made? In most of the EU, it's 100,000. The reach, where can you send it to? Who can actually handle it, et cetera, et cetera. So there's a lot of issues surrounding it, and yet legislation in many countries, or norms, or even, as I said, the retail side is pushing it.
If things aren't getting slower, like you said, and there's other elements that not all of the economy, all of the systems are able to handle instantaneous or real time. If you look at accounting speed versus Treasury speed, Treasury's every day they're setting a cash position. They're looking and seeing what they have today, what's going to be available tomorrow. They have a need for intraday information for sure, maybe not instantaneous, but there's a need. And so, if we've gone from accounting closes that used to take 12 to 15 days, and many companies are pushing them down into the 5, 6, 7 day period, even the accounting world has sped up. Where will Treasury need to be on this? And is this broken down by, certain processes occur overnight? Getting that information instantaneously at 3 a.m. versus 4 a.m. may make no difference. But let's say large transfer, very large transfer coming in may be extremely important to get that information instantaneously, the info, the data. How do you look at the move towards faster? Where will those decision points be, or what will corporations be concerned about? And then ultimately, how do banks support that?
Good question. I want to come back to that. I think that, most treasurers would like a world where they have total information at their fingertips when they want it. And what does when they want it mean? That means when they can also do something with it. So knowing something, if you can't do anything with it, is not so helpful. So the question is, if you've missed your cutoff times, does it matter if you know that you have the money, if you can't invest it or you can't pay down debt? One of the many questions. But the problem that I'm seeing right now, and this will change over time, is many systems today, for example, are still in the corporate world not programmed to accept ISO 20022, which is going to be used, of course, by the banks ever more exclusively going forward. And you'll see, the ERP systems, most of them can do it, but not all the TMSs can, not all the accounting systems. So if you're getting information that is truncated or not complete, you won't have the right picture. But getting back to your original question, I think that most treasurers would like that. On the other hand, the question is, do they want to be working 24/7? If they know all this, yeah, but in the end of it, if they know all this, if they have all this information, they know exactly what their balances are, at any moment in time, and they know what their FX positions are, et cetera, shouldn't they be doing something about it? And question is, can they, should they, what's the cost? What's the cost of not doing it? As long as interest rates were close to zero, it didn't matter so much. Now it's getting to be more of a question. And the other question you posed was on banks. We know that not all banks certainly can provide information or do transfers instantly. And when I say instant, I'm thinking of within, say, 5 to 10 seconds. When I make a transfer from my, I test this occasionally from my ABN AMRO account in the Netherlands, and everything there is instant, to my Deutsche Bank account in Frankfurt or in Germany. I see the money. By the time I get to my Deutsche Bank account, I can already see the money on my account. So and I think that in some ways that's very enticing to treasurers. But on the other hand, they also have, they've spent a lot of time and a lot of thought getting their supplier payments down pat. They don't really care. They don't really want to do it within 10 seconds. They plan this out and they know ahead of time and they prepare their runs. It's more the treasury payments. It's the, foreign exchange settlements. It's the, loan repayments. It's different things that you possibly haven't planned for, either coming in or going out. And I don't think, certainly all the banks are not ready. Legislation in the EU will probably force all banks to be ready to receive and to send, but it's not there yet. And the question is, if we have PSD3, whether that will then also regulate the cost, which is also an issue because it costs more today. I don't make instant payments from my Deutsche Bank account because it costs more and it's not necessary. If it was really necessary, I would do it.
Yeah, the difference of paying suppliers where there's, regular terms, trade terms, settling on a certain day. Why would you need to send something last second instantaneously, unless it's to repair an issue or to resolve something? It just wouldn't be necessary.
Sure, but 1 in 1,000, right?
Yeah, somewhere along those lines. Yeah, and as you talked about the speed and what Treasury wants to see, can they do something with it? That was interesting as well. In that faster information, if you can't do anything with it, that can create a challenge for sure. I have all this information. I need information when I need it to make good decisions. I guess if I have it earlier, that's not a problem, but it's not as essential as getting it when you need it. But a question on the bank side. So an individual company may not need everything real time or the 5 to 10 seconds, if you will. But a bank serves a lot of corporate customers, and some of them, whether they have B2C customers or they have other needs, some of them are going to need these faster ways of getting information, making payments, settling some type of transaction. Is that going to make it an imperative for all banks to be real time to meet the speed for the fastest customer, or is that really just not the case?
I'll tell you my opinion. My opinion, and I think it's shared by most in this market, is we will have instant payments, not because the use cases today, say in the insurance industry, is a great example where they want to pay out quickly, instantaneously, oftentimes when there's been some sort of an accident or an issue, so they can pay, whatever it is, so they can pay out to the beneficiary instantly. So that's a, B2C situation. There's also some great examples in real estate when you're buying and selling, or when you have trade, your ship is in the harbor, you need to pay the steerage charges, etc., and you need an instant payment. Those have been, those are classic examples of why instant payment is good. My opinion is that most banks will move to instant because they'll be forced to by regulation, or they'll be forced to by peer pressure. And let's not forget, we started out by talking about retail. And if they have to do it for their retail customers, the next question is, and banks are divided on this, I've heard both, do they want to maintain both systems? In other words, if they're making instant payments, and I'm not saying the retail system is the same as the wholesale system, but if they're forced to make wholesale instant payments, do they want to also maintain slower, normal, let's say, you use again Europe as an example, so SEPA credit versus SEPA credit inst, do they want to be able to do both? Some say no, too expensive, doesn't make sense. Others say, yeah, there's a benefit to having both. I think they're going to converge. I think it's going to be a financial and a regulatory point that eventually we will have pretty much instant. Is that 5 years away, 10 years away, somewhere in between? I'd say it's probably farther away, but I think it will happen.
Well, thanks, Kate, on that. Before we move to the next section, I just wanted to have you do a quick introduction of yourself. I know I gave a little bit. You run a podcast. I think it's called The Digital Dump. Maybe give our listeners, for those who may not know you, just a little bit of background.
Start out by saying that I'm half American, half German, so I sort of have one leg in each continent. So that's where my research and my interest really runs. So to both, America and all of Europe. I started my career after my MBA because I was a pure humanities student and I had to prepare myself somehow for business. I went into banking, over 30 years of banking, primarily transaction services, so cash and trade and everything that comes with it, securities. And then very heavy risk experience also in compliance, so credit risk, compliance risk, etc. At some point, however, I decided it was time to go freelance, which I did 5 years ago. And I've been very, very lucky to work together with and for many really exciting and interesting companies. Many I can't even put on my LinkedIn profile because I'm under NDA, but I get to talk to treasurers, I get to talk to banks, fintechs, payment providers, startups, the whole 9 yards. It's an exciting place to be in. I really work very hard to keep that cutting edge so that I can build the bridge between what was and the real innovation and digitalization going on today.
Thank you for that, Kate. The next section on payments. Is it payments or information? I know you've touched on that a little bit, but what's more important, the speed of the payments, the richness of the information? I know it's not necessarily completely one or the other, but...
Yeah, that's a really tough one. I think most treasurers are going to say information because they'll want that information to make decisions. That's more important to them, I think, than to actually have the payment be instant. If you talk to a consumer, they probably want the cash, so they want the money. But if we stay with wholesale for a moment, I think it is more the information side. As I said, the corporate treasurer and the cash manager and all the folks in the finance area, they need to have a picture of what's going on. So they need to really understand where their cash is. If some of the accounts aren't reporting in time, that could be a huge gap. That could be a gap in terms of their foreign exchange position, in terms of loss of interest, in terms of needing to fund because they don't realize they're down. So it's very much information. Once you have the information, of course, you want to be able to move the money, possibly redistribute those funds to make sense. But I would say information number one, and that instant payments is one of the tools.
What are some of the other considerations on that, in addition to the payments and information? But we haven't talked about fraud, and that always seems to be brought up heavily about real time and faster presents greater opportunities for fraud. At least that's what's a talking point there, right? We're going so fast, we don't have time for the right level of controls.
It's huge, and I worry constantly about it, as do I think most treasurers. But what you've got here is putting on my compliance hat too, so you have that piece as well. The faster things move, the less time you have. It's just a matter of physics, if you will. For monitoring your payments, for filtering your payments, for really making sure that the AML requirements are being met. Also, I've some interesting articles and comments from people are really that faster payments seem to attract faster fraud. So because there's less time to review, even though the systems are becoming faster and more sophisticated, et cetera, you have less time, and therefore it's possibly more error prone. And once those payments are gone out the door, it's much harder to get them back, especially if it hasn't been an error, if it's supposedly you've done something correct, but you have sent it perhaps to the wrong place because it is, there's a fraudulent invoice or an invoice with a fraudulent account number. And there isn't as much time to really look at it, correct it. That begs the question, do you do pre-work on your payments? There are a whole variety of fintechs that do that. We know there's TIS, there's Kariba, there's, many that really look at that payment batch and try to do sort of pre-tests on them so that certain things can be caught before they go to the bank. Banks are also putting in all kinds of software and due diligence and training in order to stop certain things from happening. But it's a huge concern that fraudsters are always working one step, lockstep ahead, or, even, a few steps ahead, trying to figure out how they're going to exploit the next best invention or the next best discovery that has been put into place on the payments world.
As you said a couple of those comments, it made me think of what companies do on the pre-test or the setup. Just because the payment's faster, they still have security requirements and control requirements, or they should have those. And the need for speed should help with the validation, the confirmation process. But that shouldn't necessarily mean that they zip it out the doors without having the checks done, right?
Well, if I look at it from the bank side, if the bank gets the request for payment, think of what I just told you about my ABN AMRO payment to my Deutsche Bank account, just as a very simple, that's seconds. Now, how much time did the bank have to, if you will, filter and monitor that payment? We could all say, all right, there are certain safeguards that are built in, perhaps such as repetitive payments and payment masks where you have pre-fed information, et cetera, et cetera. But that's pretty fast. So the whole bank filtering and monitoring, I ran compliance for ABN AMRO on the IT operations and GTS side before the merger or before the implosion of the bank some years ago. That's a hefty task and difficult to do as you speed up the process. So you need ever faster technologies, ever faster systems to actually do the same work. It's a tough one. That's different than the corporate side, who may say, fine, I'm going to not send my file to the bank until I have done pre-checks myself to make sure that I don't have fraud, I don't have fraudulent payments, I don't have AML issues, I don't have all of this, so that the payments will be processed correctly or processed without any issues.
One of the 12 security principles we talk about is speed matters. Not necessarily doing a transaction quick, but speed of detection of a problem. So let's say a payment has gone out quickly. You need as much time as possible to you want to find that out. If you can't stop it ahead of time, but you find it out soon, speed of notifying authorities, tracking items down matter greatly. That's why the criminals oftentimes target days before holidays when they know people are scooting out of the office. And so they have as much time to exfiltrate the funds, move the funds out of these accounts that they control to taking it out of the banking system. Yeah. So if it's like it takes, a certain amount of time to get it out of the country, but now that time frame can be shortened. The speed matters. There's no time once something has escaped from catching it before it's completely gone.
You have to think about, the olden days, as it were. I go back farther than I wish to admit, but you'd have a payment that you would, you debit a client's account, and the banks were all about holding that money. Remember, they were living from balances. That was big, so we might hold the funds for 2 days. That's how we got paid. So there was plenty of time for the customer to say, stop, don't send that out. Right?
Yeah.
That's gone.
So Kate, you thought about this quite a bit as you consider what's the view on the future towards faster and what's happening today? Where do you see changes taking place? What does need to take place?
If we look at instant payments sort of as a bellwether or an indication, there's almost 80 countries in the world with real-time payment schemes, and many more that are, how many countries are there? 150, 180 that I'm not sure even, but there are many more that are now trying or looking at schemes. And the problem is that these schemes tend to be very local. Sometimes they're regional like the EU, but mostly they're local and not global. So I guess the other question we have to ask ourselves is, even if we get our local schemes working within, if we want to call it real time, within just a few seconds, what does that mean about cross-border? So that's going to be a tough one, a really tough one, in my opinion. And then we have to look at what is the take-up. If most of the corporates aren't all that excited, and I say this very carefully, but that's my view, that most of them are not all that excited about instant payments because they don't feel they really need them. There are other things they need more first. They want the information, and they want perhaps the ability to make the odd instant payment or the odd quick payment. What is that going to mean? If we look again, let's use Germany as just my example. Germany is the front runner of all of Europe in terms of how many instant payments. And that's only for the 2022, the numbers are like slightly more than 2% of total payments were instant. That's not very much when you consider that Germany is number one in the Eurozone. So we still have a long way to go. Now, that's also because not all banks can receive and send, and not all banks do it for free. In fact, most don't, as we talked about. And Treasury says, well, 100,000 is too low a limit for me. So there are reasons for that, but it's still a very small percentage. So they've got to want it. And if they don't want it, then how long is that going to take? The other side of the coin is, if you look at checks, and I won't touch America here, but if we look at checks in Germany, checks disappeared. Why? Not because necessarily people said, I don't want to write them anymore. It's one day that they weren't accepted anymore. It's very easy. You had to figure out a new way. So if we go to instant payments, I'm sure we'll figure that out. But until that happens, I'm not so sure the acceptance is going to be great enough to make it as interesting on the wholesale side as banks would like to see.
Sure. Yeah. So, Kate, any final thoughts on real-time Treasury?
Well, I guess I would say, after all the almost negative comments I just made, I think it's coming for various reasons, not perhaps all the right reasons. I say this carefully, but I think it is coming. I think real-time Treasury is important, or at least this just-in-time Treasury, because treasurers need to have the information, and they want to be able to act on information that's accurate and very timely. And they have different tools. And one of them, as we discussed, are real-time payments. So this instant payment, real-time payments, payments now, whatever we want to call it. So I think there is definitely that is coming. It's just more of a time frame question. And also, what does that mean in terms of, as you rightly said, fraud? Will we be able to get to the point where we have that better under control, or will we still have supplier payments for as long as possible running through a different system because there's more time to check and validate? So I think we're moving in the direction. I don't think it's stoppable. It probably shouldn't be stopped, but I think there's a lot of bumps on the way.
I like it. A lot of bumps on the way. Awesome. Thank you so much, Kate.
Thank you, Craig.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.